The crypto space is full of a vast variety of different cryptocurrency tokens. Some of them are old, like the Bitcoin, which was groundbreaking when it came out. Then next up, Ethereum. And from there, things quickly proliferated into a large plethora of different tokens. Some of the older ones are very well documented, very well established, and the software to run the databases is public and open source, meaning that anyone can look into it and anyone can contribute to it as long as the community accepts the changes that people bring to it. These are some of the projects that are known to be solid and stable, that are trustworthy, and where you know that there is an inherent value in some of the functionality, for example, that the Ethereum blockchain brings into modern technology. Then as a side piece to that, you have a lot of different spin-off tokens. For example, you have different tokens based on memes. You have tokens based on when, for example, Elon Musk tweets something, then those will go up in value. There's a lot of different tokens that are rising up out of almost thin air, and they disappear just as quickly again. So you could say that it's kind of a jungle out there, or almost in sort of, from my field, quantum mechanical terms, you could say that there's kind of a cryptocurrency foam, and that there's a few stable tokens, and there's lots of variation on what comes and goes and what lives and disappears. When you want to invest in cryptocurrency, it's always good advice to investigate the particular token that you're investing into, both to avoid scams, but also to understand a little bit about what this token brings with it technological-wise or technology-wise. So Bitcoin is the oldest and sort of the groundbreaking technology that brought the blockchain, but from an investment perspective, it's a little bit more like gold, in that gold is a scarce resource, and so are Bitcoin. It's built into the Bitcoin blockchain that the Bitcoin becomes more and more scarce over time. And this is measured in how much supply you can produce in a year compared to what is already in circulation. And this is a standard number that you calculate in ordinary asset markets such as copper, silver, gold, oil. And right up there at the top of the list, you find gold with a ratio of about 65 between production and storage or circulation, meaning that it would take 65 years of gold mining to produce the same amount of gold that is in circulation today. This is one of the factors that illustrates whether a resource is what is called scarce. And other resources that are scarce is silver, for example. The ratio for silver is, as I recall, about 20 to 25. And when you do the same calculation, for example, for Bitcoin, you end up at a rating of about 60. So just shy of where gold is located. But the Bitcoin ecosystem have this mechanism built into it that the reward for mining is halved. So Bitcoin is going to be even scarcer in the future and have an even higher scarcity factor or ratio here compared to gold. And this is, of course, interesting from an investment point of view, in that typically scarce investment objects, they tend to go up in value when the scarcity increases. And that is also has at least been the case for Bitcoin historically. So that's the case for investing in Bitcoins directly. There are other projects that aim to streamline, for example, the transfer of funds between different countries, so international financial transactions. And they do this by injecting a cryptocurrency as a middleman between fiat currencies. And using that, they can actually, I think this is the XRP blockchain, and they can actually bring down the transaction time on fiat currency down to just a few seconds for transfers anywhere in the world, where you first essentially buy the XRP token, then it's transferred to its destination country, and then, or destination wallet address, and then from there, they transfer it into a local currency. So these are some of the things that you can be aware of from a technological point of view that will also have an impact on what kind of investment you could make. Also, of course, there's all the spurious tokens that live short lives, and some of them are unfortunately scams. They live very short lives. They're hyped up very much in the very beginning. Perhaps the people behind it will offer special rates for people buying in early and so on, and then they will just disappear completely off the radar and leave everyone at a huge loss. So I would be very careful about investing in unknown or new cryptocurrency tokens. At the very least, I would say investigate the token in question, see if there's a company behind it, make sure that it has a registered license number with the local authorities, and then read the fine print in the blockchain paper for that coin. There have been examples of scams that have looked very legit, and then it turned out that there were simple mechanisms built into the blockchains that prohibited people from selling them again, basically locking away their cash in or their hard-earned money into assets that they could not liquidate again. So there are many different classes of tokens. I've touched a little bit about the different classes and why you might want to invest into some of the older ones, why some of the newer ones can have a really good reason for existence, and finally, these caveats that you have to be aware of if you invest in new tokens.